Welcome to my first video in English. I'm excited because it's the first time that I do a video about a mining stock in English. So it's my first time. It has been a long time that I don't speak English, so I don't be very fluent. I apologize, okay? I hope you like my video about Blackrock Silver. This is a very good stock. You will see it's a junior company and explorer, and they have a very nice asset in the United States. So let's go. No more introduction. I go directly to the topic. I will replace the scene here. Okay. So as you can see here, they are in Nevada in the United States, and they have an annual production that doesn't care because they are not producing. They are an exploration company. They just have a preliminary economic assessment on the project Tonopah West. So no production currently. They have a future mine. I will say that this will be a future mine. There are no reserves because as they only have a preliminary economic assessment, it doesn't have any reserves associated. They do have mineral resource estimate and only in the inferred category, 6.35 million ton, or grading 235 grams per ton for silver and 2.8 grams per ton for gold. The project that they have is Tonopah West, that is the one that we'll analyze in this presentation. At Tonopah North Lithium and Silver Cloud, we won't analyze those projects, okay? Only Tonopah West. The market capitalization is $145 million, and you can see here their current level or cash is 7 million, and they have a working capital of $6 million. They have no debt. Typically, the explorers, the junior mining companies, they don't have debt. And what they do basically is they raise capital and they spend the money in exploration. I was reviewing the numbers in their financial results, and they only spend money in exploration, in drilling mainly. They don't spend money in marketing, they don't spend money in investor relations, so this is very good for this company. We don't want to have lifestyle companies where we pay the management salary basically to get rich. Okay, so this is good for this company. We can buy this company in the TSX Venture in Canada. The ticker is BRC, and they have 320 million shares issued, outstanding, and fully diluted 389 million shares. Tonopah West project is located in this zone of Nevada, very close to California border. Well, very close, 1 hour drive more or less, and in the middle between Reno and Las Vegas. This is a former mining district that produced historically 8 million ton during the last century with a value of $150 million. In the particular portion of the district where this project is located, they extracted 2.3 million ton ore with a value of $40 million. There is no historical mineral resources or reserves associated to the western portion of the mining district. The geology, not surprisingly, is an epithermal system with quartz veins and some sulfides. This is typical mineralization for silver and gold in West Americas. The average thickness of the mineralization is 4.3 meters, and the project is grouped, or the veins present in the project are grouped in Denver Paymaster, Bermuda, Victor, and Northwest Step Out Vein. You can see in this photo, DPV stands for Denver Paymaster Bermuda. Okay, you can see here the Denver Paymaster Bermuda vein subsystem, the Victor vein system, and Northwest step out vein system. And this is the main areas are in red. The one that have been modeled in the mineral resource estimation. This area is expansion potential for the project. As I said before, this is a former mining district, and you can see here the surface infrastructure and underground infrastructure that there is in place. There are some shafts. These icons are shafts that were used in the past during the last century, and these are the different underground levels that they developed in the past. There are some historic mine dumps and tailings area, and as you can see here, this project is adjacent to Tonopah City. This is very close to Tonopah City. So regarding the metallurgy, the recovery is 95% for gold, which is pretty good, and close to 90% for silver, which is also pretty good. The processing plant is 1,500 tons per day. That's the design that they have in the PEA, with a processing flow of crusher, milling, cyanide, and merry-crow recovery, and smelting into gold and silver doré. They produce gold and silver doré in this project. So I think that this is very straightforward metallurgy and flow process. Let's review the numbers of the preliminary economic assessment from September 2024. Please keep in mind that this economic estimation, is based on inferred resources. The base case that they are considering is 23 price for silver and $1,900 price for gold. Keep in mind that this is a very, very, very low price of precious metals. Okay, current spot prices are much higher than this. The most relevant number for me is the internal rate of return, 39%, pretty good. 2.3 year payback, pretty good, considering both numbers that we are here with a low base case for price of precious metals. 7.8 years life of mine, and very low capital intensity, I will say, considering this project is in the States. Okay, only $178 million. The all-in sustaining cost is $11 with 96 cents for silver equivalent ounce troy. This is considering the gold as revenue and translating the gold ounces into silver ounces. Okay, they are not considering in this figure the gold as credit. That's important to note here. Total gold produced throughout the life of this mine is 424,000 ounces, and total silver produced is 31.78 million ounces. This mine will deliver 4.1 million ounces of silver every year. That's around 13% of all US production. Silver powers key industries, electronics, solar panels, and this project is set to become a major force in America's industrial future. As you can see here, the cash cost for underground mining, processing, general administrative, refining, produce a total cost of $128.60 per ton processed. This translates, considering these precious metals prices, to a cutoff of 190 grams per ton of silver. If you run the math and calculate it with the current spot prices, you will see that it increases to 115 grains per ton for silver and 1.32 grains per ton in case of gold at current spot prices. So this is a project where margins are very high considering current spot prices and considering that in the definitive mine this cost remains true. Okay. In the project, there is also a case of increasing 20% the price of precious metals to $27 for silver and 2,280 gold. That results in an internal rate of return of 54% and almost $500 million net present value after tax. But also I ran some calculations with the spot price using ChatGPT. Okay, I didn't do the modeling. Okay, I use a fast method with ChatGPT, and the result is a net present value around $900 million and a relation between the net present value and the capex of 5 times. Okay, the net present value will be 5 times the capex required. So this is, I would say, this is a pretty good numbers. If I had to make a bet, I will bet that this will be a mine. This company not only have a nice project with good economics in my humble opinion, but also we have near-term catalysts that makes me love more this company. The first milestone will be in the third quarter of 2025. They will have a mineral resource estimate that makes conversion of inferred resources to measured and indicated. What they did is that they drill this area, the DPB area here, with the objective of converting between 1 million ton, 1.5 million ton from inferred to measured and indicated. This area has been designated first because this area is the one that will be mined before in the mining plan. The first years of the mining plan in the PEA, they will mine this area. So they are converting this area into measured and indicated resources. That will improve the quality of the mineral resource estimate. The next milestone is in the first quarter of 2026. They are doing an expansion drilling now. They expect to drill 5 kilometers, 1.2 kilometers to the east in this area, because they have a theory that this deposit is a continuous vein system from the northwest to the eastern expansion, and in this area to Victor resource. So they expect that they can demonstrate that this is a continuous ore body from the northwest to southeast and in this area. So we will see. This no doubt will be a nice catalyst for this company if they can add more tonnage to their mineral resource estimate. I expect that they add resources in the inferred category. And last but not least, in the first quarter of 2026 also, they have another milestone with releasing an updated preliminary economic assessment using the updated mineral resource estimate. I guess that in this updated PEA, they will include the conversion of resources to measured and indicated, but not this expansion drilling. Okay, because I think that they won't have material time to do that addition. So I expect a nice re-rate of this stock when all these milestones are completed, because they will improve the quality of the mineral resource estimate and also they will reduce the level of uncertainty that they have in the preliminary economic assessment. So what is not Blackrock Silver? This is not a shitco. This is not a dog of a project with bad economics, with very high capital intensity. That's not Blackrock Silver. Blackrock Silver is a project with very good economics, high margin, low capital intensity. So that's it. This is not a dog of a project. This is a high quality project. So if you want to invest in a dog of a project to get a very high leverage, this is not the project. Maybe in the future I will present another choices for that purpose. The geology is not perfect. I would like to see higher thickness, but the thickness that we have in this project is, I would say, not perfect. So that's it. This is not risk-free. I mean, you have exploration risk. It's true that there is no operational risk because this is not a producing mine, but there is some exploration risk. For example, if they don't meet the target when they release the mineral resource estimate, and they convert less ounces to the measured and indicated category, this is a risk, of course. So that's it. This doesn't correlate to metal price. What I want to say here, listen, this is a stock. When you buy Blackrock Silver, you can get an increase of price in the silver, but not increasing the price in the stock itself. Okay, there are more forces in play to move stocks higher than just increasing the metal price. So you know that you are buying a stock. So if that day the metal price is higher but the stock markets are cratering, your stock will crate. Okay, that's the point here. This is a project that yet it doesn't have the highest confidence on the economics of the project. Okay, I mean, you know these economics are based on inferred resources, and this is a preliminary economic assessment that is preliminary by nature. Okay, so that's it. And not a ready to build project. Okay, so they need, maybe they want to increase the confidence in the economics and they will release a feasibility study. They need the permissions, environmental, from the local authorities, and they need the financing, of course. This is what we get when we buy Blackrock Silver. In first place, silver and gold exposure, leverage exposure to price of precious metals, because for every point that increases in the price of precious metals of gold and silver, we get maybe 2.6% or even more change in the intrinsic value, in the net present value of this project. Then we have an exploration upside. They are doing exploration, they are drilling, and when they produce updated mineral resource estimate, if they beat the market expectations, we get a nice reward. This will be a mine. I have no doubts that this will be a mine, because what we say in the following point, this is in a tier 1 jurisdiction in the US. This will be a significant portion of the annual production of silver in the States, and silver is a critical industrial metal for uses as important for the future as photovoltaic energy. So this is a very relevant mine in the US. and the quality. The grade is good, the capital intensity is not that high, so it has all the ingredients to become a mine. And there is no operational risk. We won't get any setback because the production on a quarter is below what we expect, or because the guidance that they do is not what the market expects, or because they are below guidance. No, we won't have problems because this is not a mine operating at the current moment. Let's talk about valuation. Typically, in the mining sector, one ratio that we use is the price to net asset value ratio that compares the current market capitalization of the company with the net asset value of the company. That is the projects, the net present value of the projects, as we saw before, for example, with Tonopah West net present value, and the value of the balance sheet of the company, the cash they have, the debt, and other items of the balance sheet. So in case of the average developer, the ratio is 0.5, which means that the market gives half the value of the assets of the company. And in case of Bisla Silver, for example, is 0.62, which means that they have a little premium. It's true that they have a lot of cash on hand, and it's true that they have a very good project in Mexico, okay? And there are other companies that get below that average. For example, Gold Resources, they have 0.3, and in case of Blackrock Silver, they have 0.15. So it's a very low valuation compared with its peers. When they will close this gap? They will close this gap when they get the conversion of inferred ounces to measured and indicated ounces. So this is good news for us. We are invested in this company. We have a nice re-rate in front of us. And for the average producer, the ratio is 1.26, which means that as this company is doing steps to become a producer, we will see that the rates continues. So this is the photo for valuation.